People who work in data, they're always using data to tell a story and influence decision.
When uncertainty enters the market, what are the first signs that we see?
A credit score will tell you what's the probability of this person defaulting in the next 6 months. The foreign markets have adopted alternative data, so they use data which is not financial in nature.
Do you think Kuwait has today this financial discipline, or do you think it's more financially protected?
You could be granting thousands and millions of loans a day on a click of a button. When they go to big banks, they don't know them. They just overlook them. People, they call them the thin file customers, meaning somebody who had no credit history.
A lot of the things that you will reveal as the credit bureau are things that are uncomfortable, maybe.
It's not about CINET or the customers or the shareholders. It's about Kuwait. And when it's about Kuwait, I think everybody kind of take a step back and think about the bigger picture. CINET will be the pioneering data hub of Kuwait.
How hard it is to make unpopular decisions.
I don't know, maybe we, as ladies, we look into the details more.
We're overthinkers. Don't judge us for that. Good afternoon, and thank you for tuning in. This is Cristina. Welcome to a new episode of The Middle Ground, a space where we analyze the business landscape of Kuwait and of the wider region through the eyes of the people shaping it. I would like to start this episode by thanking our partners at Studio 8 for having us. Thank you so much for your support. In every economy, there are things that we see: projects, investments, companies, and sometimes even markets. But beyond them, there is a layer that we rarely consider, and that is behavior. Who is expanding? Who is borrowing? Who is repaying? And ultimately, who is acting more cautious? And these are things that become even more important in times of uncertainty. Joining me today for this discussion is Mai Alowaish, CEO of CINET Kuwait, an institution that sits at the intersection of finance, technology, and trust. And today's conversation is going to go beyond credit score, because in an evolving economy, we need to understand more and more how we can build trust in an increasingly data-driven environment, how credit scores talk about an economy of a country, but ultimately how data is shaping financial decisions. Mai, thank you so much for being with us. Welcome to The Middle Ground.
Thank you. It's a pleasure to be here.
I would like to start today's conversation before we go into the actual information, into financial data and everything that you guys do at CINET. I would like to start a bit with you. Because you're somebody that doesn't have the classical trajectory in terms of career. You don't have a purely banking, let's say, financial background. You're somebody who has experienced also roles related to technology, data analysis, obviously finance. And I'm curious to understand, first of all, what did pull you exactly into this direction? What did you feel took you towards this direction of data and data analysis? And how did that ultimately lead you to CINET?
A very good question. The data, there is nobody who's in the market in data now who actually went to school for data or did background or had a lot of experience in data, because it's such a new discipline in everywhere, especially in the banking and financial sector. So I started my career over 20 years ago. I started it here in Kuwait, working in banking, and specifically in internet banking, technology part of banking. So that I had almost 10 years of solid banking experience right here. And then I had another 10 years in the States where I worked with Google partners, focusing mainly on data and analytics. And I think what drew me there is whenever you're working as an e-commerce business, e-commerce was the first business to focus on the data, because a lot of the data in e-commerce was digital, was easily digestible and easily crunched into insights. So you will find most of the people who work in data right now were actually in e-commerce, as it's one of the first ones that monetized the data, the first one that actually made insights and actionable insights out of the data. And I think the mixing of 10 years in data, 10 years in banking, I think it's the right mix to be in somewhere like CINET, because CINET is technically a data company, but has financial data. So it was honestly every year of experience that I had is being capitalized on today as I lead CINET.
Yes. I find it fascinating in a way because I think although everybody knows of the existence of the credit bureau, I think most people don't really understand the role of it. And beyond its, general description, let's say, a lot of people don't really understand the weight of the credit bureau to the local economy in general. So I would follow up by asking you, what do you think people should understand, or how would you describe, let's say, the role of the credit bureau outside of it just being a credit bureau?
Definitely. I mean, uh, businesses or lenders always knew the credit bureau, but the public, you're right, have never understood the role of the credit bureau. And a lot of the times, CINET is now just celebrating 25 years since inception.
It's amazing.
Yes, yes. And, it's for 25 years, I would say the past 20 years, or maybe just it was purely B2B business, talking to the lenders only. But I think there was a turning point in 2019 when there was a law 9 of 2019 that was launched in Kuwait, and there was also similar laws across the region where it introduced the credit bureau not just as a B2B, but also that it has a role toward the public as well. So we added the B2C aspect there in order that we have to have some credit scoring. There has to be financial transparency because many of the time, banks report data about everybody, about their payments, loans to the bureau, and other banks read it. But the public don't know what they reported about. And every information about your loan or your credit card, you wouldn't see it. But since Law 9 of 2019 came out, there was kind of a mandate that people should have access to their credit report and free of charge. So we do that as part of our advancing credit literacy to the public. And one thing that people should know is that the credit bureau is there to help you make informed decisions about the next loan you're planning to take, is there to show you what banks are reporting about you. And you're able to see everything that's reported about you because it's your data, it's your loans, it's your facilities. You need to know first before the banks see it. So we're trying to reduce the information asymmetry, I would say, to ensure that there is full transparency in the market.
I actually love how you pointed at owning your own information and knowing about what's going on. And I think ultimately this is what we're talking about. It's beyond credit score, right? It's about trust. It's about building an accurate log track, let's say, where people can see your information, but you can use it in a way that it's actually useful for you. But you mentioned this B2C aspect, and I'm curious to know from your end, what do you think is the most misunderstood thing about CINET in general and the credit bureau?
Well, if we talk about the public, a lot of people don't hear about CINET unless they get rejected for a loan, and they're like, "Oh my God, this is where I get blacklisted." So we've been having some kind of bad names of the blacklist or the block list and things like that, and it's a very old misconception because previously, and in many countries in the world, even in Europe, credit bureaus historically acted as a registry only. And if somebody defaults or had some legal issues with loans, they would put him in that registry. So other banks would know about him or her before granting a loan. But that was the past, where there was just registries of people who are, defaulters. And right now, and that was what they call a negative bureau, which only negative information are reported.
Yes.
But that was never the case in Kuwait. There is, in Kuwait, our bureau is always a positive and negative bureau, meaning what the banks report about you are good behaviors, meaning you pay on time, that you are, taking responsible steps toward repayment, and negative as well. So it shows the full picture between positive and negative. And I think that's where there's a lot of misconception that it's only negative information. The problem is you never look into it unless you're probably checking your, why am I rejected for that loan? Oh, because I did not pay a credit card and that was negatively reported on my credit report. And then you're able to know, oh, do I have a credit report? Can I look at it? And that's why we've done multiple campaigns in the past 2 years. We've done the Shlonik campaigns. How are you, or what color are you? Because we what we did with the credit scoring, we put 5 colors go from red all the way to purple, which is great. And these identify kind of segments of people of different behaviors. So it goes all the way. The red is kind of risk, and the purple is elite, which is somebody who's doing really good on his credit.
Yes.
And it has nothing to do with income. It mainly has to do with your behavior.
Yes.
So people, even with low income, can have an elite credit score just because their behavior, their repayment, they're paying on time, they're borrowing responsibly, they're not always maxing out their credit. And then we've done another campaign. It's called the Mr. Score. And the Mr. Score is basically a behavioral coach. He's like a certified coach in credit behavior. And it's also a way for us to show the public that you have control over your credit score. It's not what the banks report on you. It's what you do, how you pay your payments. And that's kind of the shift of thinking, that you're in the control, you're in the driver's seat of your credit report and your credit score and your credit color. And that's why these continuous campaign kind of are trying to build this new picture and exact literacy. There is, financial literacy is a bigger subject, but credit literacy is a very important subject.
Yeah, I'm actually, looking at what you said, I get the feeling that most people associate the credit bureau with more punitive action, let's say, whereas what you're saying is that it's just a tool that creates a healthier and more transparent economy. But I'm curious, at what point does the credit bureau stop being just a tool and it actually becomes a reflection of the local economy?
A very good question. I mean, usually when you look at what we have in the credit bureau is really an economic sentiment of what's happening in the country. When people are borrowing, when there is new, credit card spending and new car loans, people feel good about the economy and they are spending more and they are taking more loans. Same thing for corporates as well, not just people. When there is, companies borrowing more money means there is growth. There is more jobs, there is more hiring. Same thing for SMEs, the small and medium enterprises. When there is more lending or they're borrowing means they are expanding and growing. So a lot of what we see in terms of credit behavior really reflect what's going on in the economy and how people feel about the economy.
Exactly, because it stops being just about numbers, right? It becomes, like we said, the underlying behaviors. It's cautious, discipline, all of these underlying, let's say, attributes that you see in the economy. I want to ask you, do you think Kuwait has today this financial discipline, or do you think it's more financially protected somehow? What do you think is the attitude, let's say, of Kuwait as a market?
I mean, one thing about Kuwait is that we have a very strong kind of banking presence and a very mature banking presence. But at the same time, we have a very strong regulator as well. And that is honestly it's a very unique situation, because for us as a credit bureau, it provides us with very good data. When you have a mature banking practices, you have very good data coming from there.
Is your data mainly coming from the banks?
No. So banks are about 30% or so from our bank. So we have around 80 data providers. They go from local banks. And then you have another kind of, they break into kind of where they're regulated about, but it's open for any company that does any payment behavior. So you have the banks, of course, financial and leasing companies. We do also the buy now, pay later, which is a smaller kind of portfolio, but it's an up and coming portfolio, which is, the BNPL companies like DMA and so on. There is another also company, there is a segment for the retailers who are, selling on installments. So even the electronic store, if you buy a phone or if you buy even a laptop or even furniture on installments, this data gets reported to us. So we receive millions of data points every day around every single loan or behavior. Even car installments come into the picture. And that's the beauty of having kind of a credit bureau that looks at everything, not just loan. Historically, you're right. Historically, it was just banks and credit cards. But that was up until 2019 when the law was introduced.
Yes.
To say that this is the law of credit information exchange. When we say credit information, It's not just loans, it's anything that is of a payment behavior. And one big portfolio that we are building right now is the real estate or the tenant portfolio. So what we noticed is a lot of the tenants in Kuwait, when, they could go and rent an apartment, for example, and default for 3 months. They get evicted. They can go to the building next door and rent another apartment, and nobody would know about the history of that.
This is a great point.
It is. And landlords were suffering. A lot of the real estate companies were suffering. And that kind of triggered a big collaboration between CINET and the Real Estate Union. And we've got the regulator, kind of the Central Bank of Kuwait has blessed that project. The Ministry of Justice has also contributed. And what we're working is kind of a national project to introduce not just a credit report, but a tenant report. And that will include kind of a mix of information of your credit history, your tenant history. And it's a new type of data because your rent, your monthly rent is part of a payment behavior. And that also falls under your credit profile and credit report.
And I think this is also going to add, let's say, also the element of speed of accessing information, right? Because basically, if it's all digital, if somebody is defaulting, if I would have normally found out after, let's say, 3-4 months when he has or she has a, let's say, I don't know, a court hearing or where, it eventually gets disputed, I'm thinking. Now it's much easier because through the credit bureau, you have access to this information much faster.
Exactly. And one of the things is, even in loans, the speed is now the key. Historically, when somebody wanted the loan, the relationship officer, they call them in a bank, is the one who knows you as a borrower or even as companies. They depended on relationships to give loans. Right now, if you think about it, the electronic store that, kind of you buy something online and you say, I don't want to pay it, I want to pay on installments. They know nothing about you. They have no relationship with you. The buy now, pay later as well. Dima, Tally, all of these companies, they never met that customer. So it's not as the knowledge that banking had. And you also need more speed. As a bank, they process in the branch, historically, 30, 40 loans a day maximum. But right now, if you think of these online stores, how many transactions they can process a day on installments. So you could be granting thousands and millions of loans a day on a click of a button. And that's where the data and the credit bureau becomes an essential part of that journey. Because when that bank right now, a lot of banks are going digital on their loans, on their credit cards. They want, with a click of a button, to look up that person and ensure that I have a full history of that person to be able to say yes or no to that credit card. Loan onboarding or origination, they used to call it in banks, it took 3 to 5 days usually to process your loan. And right now, banks are expected to do it in minutes. And that's where not just data. So historically, bureaus tell you what happened in the past, but right now we're not expected to do that. We're expected to tell you what could happen in the future.
So some sort of predictive analysis.
Exactly. And our credit score is a machine learning kind of score or a model that tells you about the probability of default. Historically, when bureaus were called registry, I would look up a person to see if he defaulted any time in the past. But what does that tell me of the future?
Yeah,
Nothing.
True.
But now, when you look up somebody on the credit bureau and you see his credit score, a credit score will tell you what's the probability of this person defaulting in the next 6 months.
And as you said, now probably there's also the richness of data because now the score is let's say created based on more elements, not only what it used to be. As you said, now maybe it's going to be real estate involved. Or
Exactly. And the more, and with any AI or machine learning model, the more data you feed it and the more diverse data you feed the model, the better, the more accuracy or prediction power it has. And that's kind of the beauty of any company relying on that credit score to take a decision. Our role is to, digest all of this massive data from different sectors, from years, and then come up with a single kind of score or a tool that will help you say yes or no to that person based on that. And this is where kind of the intelligence is very important to ensure that we provide that tool and we enable those informed decisions to the lenders and to any business trying to, establish a new relationship. Even sometimes what we have, people, they call them the thin file customers, meaning somebody who had no credit history. He's new to the market. He never took. So we're actually working on something called the no-hit score. A no-hit score meaning somebody who's new to the market, never took a loan, and we analyze different data points about
Okay.
that person to provide kind of a somewhat accurate measurement to tell you this person is most likely, will default or no. Also to aid that decision. So it's more than just 1 point or only people who have good credit history. And a lot of the time, banks, for example, and we've seen it, banks, you've switched banks. You've had a great relationship with Bank A, and then you went to Bank B and they don't know you.
Yes.
They're probably hesitant to give big facilities. But if they look you up with the bureau, they will be able to look at your kind of credit behavior, other places that they don't know about you.
Yeah.
And that becomes the real value, that we always know more than the credit institution, the bank, or the retailer. And we are able to give them the 360 view of that customer so they could, the decision is ultimately to them.
Yes.
But the knowledge is the power.
True. Now, I love hearing about it, and we are going to dive deeper into the initiatives that you guys have at CINET. But before I do that, I am aware of the fact that some of the people watching are not, connoisseurs, let's say, of the financial system and, everything that works around it. You mentioned earlier that Kuwait has great regulator or regulators. And I wanted us to clarify that for me to understand. When you say regulators, who exactly are you looking at? Is it central bank, ministries, institutions? Who are the regulators specifically in your activity?
Definitely. So as a credit bureau, we are regulated by the Central Bank of Kuwait. That's our main regulator, and this is the regulator that we report into. But we work with different kind of other regulators because of the portfolios that we deal with. So when I talk about our database or our customer base, there is, for the Central Bank of Kuwait, the portfolios that fall under that are the commercial lending, the consumer lending, which contains house loans, consumer loans, credit cards, all of that. There's the buy now, pay later, and there's also bounce checks are also reported for entities that are under the Central Bank of Kuwait.
Do we still have checks in 2026?
Corporates do use that, believe it or not. But it's something that, I don't think it's as strong as the other portfolios or as heavy traffic as the others.
Yeah.
We have also for the Capital Markets Authority, so we work closely with them for the marginal trading portfolio. So there is a marginal trading that, CMA or Capital Markets Authority license entities to do marginal trading, and they have to report that into CINET as well. So there is a special report for these corporates. Also, we work with the Ministry of Commerce and Industry. So as the Ministry of Commerce, they license retailers to do sales by installments. So any company, whether it's a furniture store, electronic store, any kind of store that sells anything by installments, the Ministry of Commerce is the regulator for that. And they are reporting the data into CINET through their license of the Ministry of Commerce. So, and the nice of there is the nice thing about working with different regulators, there are different mindsets, there are different type of clients, and there is a diverse data set. But that's what makes the credit report so rich, because you can, if somebody doesn't have a loan, he probably took something on a, furniture by installment. If somebody never buys anything on installment, he probably has a credit card. So the people have a fingerprint, have a footprint somewhere in any of those portfolio, and that's where everybody does have a credit report and a score.
You mentioned the all of the entities that are involved here, and there's one point I want to go back. You mentioned financial literacy, and I'm curious to understand what is exactly financial literacy. Who is supposed to take responsibility for it? Should the institutions, the public institutions in Kuwait, be responsible to offer, let's say, information for companies or people to be more financially literate? Is it our own responsibility to learn more about it? Where do we find this information? And ultimately, do you see any gaps there? And if so, where are these gaps?
So financial literacy is honestly, yes, people are responsible to look after their own financials, but or finance knowledge. But it's also, because of the new things that come up every day, because of the new things that we see in our finance. So, now with the central bank slowly rolling open banking, for example, it is the role of the financial entities to educate people. And Central Bank of Kuwait has rolled out a campaign called Diraya campaign. So the Diraya campaign is kind of a big financial literacy, and it has many pillars. And you see all of the banks always kind of advertising things around responsible borrowing, kind of even protecting your identity, protecting the card information, pins, all of that. And for us as well, about paying on time, discipline in payments. This is all comes under financial literacy. And I think it's both. The person need to know, but also the financial institution need to do more to ensure that whatever they're rolling out, whether it's buy now, pay later, or open banking, or any type of new product, that they bring the right literacy about it to the public as well. I think what we've done as part of CINET is the first thing is roll out our app and make sure that people are able to look at their full financials when it comes to borrowing financials.
So we have the CINET app.
Yes.
Okay.
So the CINET app is, it's a place where everybody can look at every single loan, credit card, any type of installments, any type of kind of something that they have to repay, whether historic, whether it's closed, whether it's currently open, they will be able to see their full profile right there. And that's offered free of charge, of course, because it's part of our financial transparency and part of our financial kind of education that you need to know more about your credit standing, your credit worthiness. When the next time you go for a bank to apply for a loan, you need to know what is in your credit report, that how are the banks evaluating you? It also shows you your credit score in real time, how your credit score have changed across the past year. It also shows you this is, I think, one of the favorites of the people is how do you stand or how do you measure across people in your age and your income as well. So if you're a person of certain age and certain income and you're borrowing, for example, 3,000, we'll tell you that people in your age and income range are borrowing, for example, an average of 5,000. So you're probably doing really good versus you might be borrowing 20 and the people are doing an average of 5.
This is actually very interesting. Now I'm going to download the app and see where I'm qualifying.
Yes, some people are happy, some people are shocked. I mean, it's a very interesting kind of reality check.
You think this is also kind of like part of your CSR, social responsibility, trying to educate people?
We're always trying to educate people to make timely payments, to show them that it's not that the bank reports that you're late. You were late before they reported you late on payments or repayments. So even our social media channels, we're always using those channels to encourage that you should, whenever you take a loan or whenever you're trying to spend, make sure that you budget ahead. Make sure that you have some kind of emergency funds. Make sure that contingency plans. Make sure that when you actually have bills, pay them on time, because every bill counts and every kind of installments of loan or credit card or even a small payment like these electronics and things that probably you won't think that 50 KD may affect my score, but it does, because it's all financial payment and behavior.
Yeah.
And a lot of people, when they logged in the app, they're like, oh yeah, I forgot about that loan, or I forgot that I was late here. And as you have that kind of looked at, and it's right there in your hand, it's easier for people to be more kind of disciplined around the payments. And this is what we're all about, ensuring financial discipline and ensuring that good borrowers get the access to the credit they get.
I also guess that your role here is not really to judge people on whether they default or not. The whole point is to help them get back on track, right?
Exactly. And that's was the whole gist of our latest campaign, the Mr. Score campaign. So there is this one guy in the campaign who literally breaks down crying because he was so late on his payments and he couldn't get any more loans. And then the coach or Mr. Score kind of walks him through on how to get back on track, and that you are able to fix your score. You're never going to be always red. You can go back into, yellow and then green and then slowly blue into purple, but it takes kind of baby steps to go and put yourself back on track. And what we see is a lot of people, once they know that this is going to affect their future, once they know that this credit score is going to help me get more funding, or for example, I want to buy a car in a few years, or I want to buy a house, this is where they kind of take take good care of their credit. In other countries, I've seen other campaigns where they say your credit score is really your reputation. It's your financial reputation.
Yeah.
And in a way it is,
Yes.
and the way we look at it also is behind every credit score, there is a family trying to buy a house,
Yes,
or
true.
there is an entrepreneur trying to establish a business. There is somebody who's trying this financial journey. So behind this credit score, there is a lot of power to your future. And that's where we say, take good care of this credit score and your credit report.
What I'm sensing is that we have made progress. From what you're saying, there has been a lot of positive progress here locally. But I do want to know, because there is no perfection at the end of the day. Is there any specific area where you still see gaps in terms of financial literacy and, maybe corrective actions that we can all take, whether institutions or ourselves, to maintain, a healthier economy overall?
I mean, there is, we've seen, and as a bureau, we're always kind of uniquely positioned to see bigger trends, to see kind of ecosystem challenges that we have currently looked at. I mean, I remember one of the things that we've seen with small, medium enterprises. So with SMEs, we've noticed that they always struggle to get the right funding or to get the facilities that they need to grow. And it was kind of the chicken or the egg problem. They can't get funding because when they apply for a loan, they don't have a lot of history. And in order to get history, you need to get funded, or you need to get a loan to get that history.
Yes.
So what we've noticed is there is data, there is history of these small and medium enterprises, but it wasn't sitting with the banks or the lenders, it was sitting with the government. There is the KNF, the Kuwait National Fund for SMEs.
Okay.
It does give loans to entrepreneurs, and it's fully government funded. And what we've done when we noticed that gap, so it was a structural gap in the data that we had. So what we've done is sign kind of a memorandum of understanding with the KNF to bring that government data into the credit reports, into CINET. And by that, automatically all SMEs or the SMEs that got funded from government, they will have some history. And if it's a good history, that will help them kind of get some more funding and grow further with the banks. Another thing is we developed a score that's specifically for SMEs.
Okay.
So, and aside, there is a credit score for individual, which is the score that we always market. But there is a credit score that was specifically designed just for SMEs, for banks and everybody to the lending institution to when they look at the SME, they look at the score and their probability of default and probably judge it better and not compare it to like a big corporate, because they're very niche and different market. And always people think that SMEs are the engine of an economy. And for us, we thought that because this is a very important kind of segment, and it's a very unique segment, we had to kind of jump hoops and go to the government, do a little bit of a data merging, do a little bit of a new scoring approaches, and build those to fix that gap and ensure that we do this is our role as CINET, as a credit bureau, identify the system gaps, the structural gaps, work with the regulator to amend them. And it's been a very good kind of case that we were able to bring that data from the government, and we are uniquely positioned to be able to get all of this together in one place, and we have close relationship through our regulator with the government to bring that.
I was actually just now thinking about this because I know a bit of the story with the National Fund for SME Development, and I know that they used to be super active, and they did support a lot of the agenda of the local authorities in developing the economy. But I'm thinking now, I wanted just to expand a bit with you here, because I think it's such a delicate aspect, right? Like if I have, let's say I start an SME and maybe things don't go that well, and I'm either the owner or the administrator, in 5 years from now, let's say in 10 years from now, if I want to try again, I don't know, first time it didn't happen, but I want to try again. My score might say chances are very high in defaulting, but maybe in these 5 to 10 years, I accumulated new knowledge. Maybe I have new partners that are going to, come along. Maybe I have a better team. Maybe I have more financial support this time. And I was curious, how do you see this? Because I feel it can't be only data, right? It can't be just data.
No, and we always say that data gives you the insights, but the ultimate decision is to the lender. A lot of the lenders also look at the potential of the company,
Mm-hmm.
look at the credit report of the person himself. That the business didn't go well, but there was good payment behavior. That's still a good kind of indicator that you are disciplined. But probably, the business does not go well. A lot of the kind of when you look at the credit, someone's credit score, it reflects the past 3 years of their credit. So some of the flags in 3 years that kind of get recycled. Even the legal indicator, if somebody has a legal lawsuit, after 3 years, it is removed off your credit file because we consider that in 3 years, if you made amends and you corrected your standing and you're doing good behavior, then there is an opportunity to start again and do kind of new lending or new opportunities.
Exactly. You mentioned something earlier, and this is a point that I think it's more more delicate. You mentioned credibility and this public image that we have, right, in society. And Kuwait, like most of the region, it's a relationship driven culture, and we see here in this environment that sometimes personal relationships and business relationships tend to overlap, and we know that reputation matters a lot. And I want to ask you, how do you maintain trust and objectivity in an environment where, personal relationships and business relationships tend to overlap easily?
That's the beauty of data sometimes because our repository is purely data and there is no human kind of entered data. It's all kind of system generated data about payments and history. What we depend on is there's no personal touches to this data that the Bureau has. A lot of our data are generated. The beauty of it is creating the data storytelling. So a lot of the data that we take, we convert it into analytics or into scores. And then that will tell the narrative. One of the things, and I think I learned that from my days with Google at working is the data storytelling is much more telling than any other way. Some people say the data don't lie. Well, it depends how you phrase it, and how you model it. But the nice thing is we took that data, for example, for corporates. As you're right on the money when you say a lot of it happens because of personal relationships. A lot of the corporate lending when it happens in the banks because this guy knows this guy or these two guys go to the same douanier and then they do the business deal and they get the funding they want.
It used to be like that. We know.
Yeah, and one of the first things that we identified is to introduce kind of analytics, like interactive analytics for banks. That is purely data, but it's not the raw, ugly data that we get from banks. It is formulated into dashboards. And with those dashboards that the banks can look at real time, they are able to identify good customers, bad customers, good opportunities, where to focus their kind of next, whether it's campaigns or collections and everything. So the data storytelling removes that personal aspect. And a few of the corporate bankers that I know personally, they were telling me now, before I talk to the customer, I go into analytics and I look at the 360 view of that customer in CINET analytics. For me to know the full story or to know what he's not telling me, to be able to grant the loan or do that relationship or go forward. And it's a culture change as well.
This is what I'm thinking about, because a lot of the things that you will reveal as the credit bureau are things that are uncomfortable, maybe. There's things that companies and people might not want to publicly acknowledge, right? I'm defaulting on a loan or I'm having all sorts of issues. And especially here, because what I saw in Kuwait is that people are very sensitive to what other people perceive of them, right?
Right.
It's important.
Definitely.
Image is important. You don't want people to know if you're struggling. You don't want people to know if your company's not doing that well. You still think you're going to fix it somehow. Did anybody complain about you?
Well, we get that on both B2C and B2B, But it's the best thing about the credit bureau kind of ecosystem is we don't release information unless you actually provided consent to share it. So whenever they tell us, why did you tell the bank? Well, you signed that consent. And there's always a consent sharing mechanism that precedes any data being shared with the other party. And with that, they gave away the information to the bank. Now, when it comes to corporate, yes, it is a culture change. but sometimes we're also revealing good information that the bank doesn't know about. So sometimes we're
So
revealing.
it works both
It
ways.
works both ways. A lot of the new kind of businesses or new smaller companies, they do have some good credit here and there, maybe with smaller institutions, with smaller. But when they go to big banks, they don't know them. They just overlook them. But when they look into their credit, they're like, oh, so you've had some history there, and it was a very good history. Then they kind of focus and kind of go further with them. So sometimes it works positively, and sometimes it works negatively. But it's that transparency that we have to do. We need to be transparent, and we need to give the full picture, but also not just picture, but tools as well. A lot of what we do, for example, through our analytics is if your customers are struggling or you have a segment that is struggling, we tell them, for example, we develop something called the collection score, meaning which companies are you're most likely to collect from, which means as a bank, I know where to focus my collection efforts. A lot of it has to provide good and bad pictures, but you give them tools. And once you give them the tools, I think banks have stepped away from just the relationship into going data-driven, into looking at the data before talking to the customer. And it's going data-driven is never a one flip switch. It's always kind of success story, building some credibility, believing into the data, and then going fully data-driven.
I actually love it because from what you just said, I have this feeling that it's also helping the business environment overall because it tends to reduce so much frustration if I'm putting my efforts into places where they might actually render results, right? If there's somebody, let's say, who has been defaulting, but there's no way they can repay anything, at least not for the upcoming period.
Exactly.
Why stress them and stress yourself for no results when you can maybe see the picture differently and focus on, as you said, on places where you can actually recover something.
Definitely. And that's the intelligence that we provide. As I said, as a credit bureau, you need to provide the tools, the intelligence, so the market can trust you.
Yes,
and
true.
Previously we were the repository of data. I think right now we are the repository of trust, because a lot of these lenders, financial institutions, even regulators, they trust us to provide the right insights, to provide the right kind of market view for them to take decisions, for them to take actionable insights. One of the even things that we're working on right now is propensity modeling. So we're able to tell
What is that?
It's another type of data science model that how soon will this person take another loan?
Okay.
Yes, and it's the data.
Talking about predictive analysis.
Exactly, and that's the beauty of having so much data. You kind of can use the data with the right maturity, with the right quality, and we focus a lot on data quality and data privacy as well, equally. Like as the higher, the bigger our models are, but the stronger our data quality and privacy measures are. But to make sure that when we provide insights about when would this person be, more likely to take another loan, and how will we default, or how will we default? All of these market insights are very important to the lenders, to the regulators, to anybody, looking at the market view overall.
Exactly. May, we were talking about the pivotal role that you guys play in the economy. And I think there's no way around it than to come back to what's currently happening now, right? The region has been, as we all know, going through a lot of uncertainty. There's been geopolitical tensions, stress on the local economies.
Definitely.
Uncertainty with all of the routing. Can we export? Can we import? A lot of things that created this sense of instability. And you guys are the first ones who see things. And I want to know from your perspective, when uncertainty enters the market, what are the first signs that we see? Is it that people borrow more? They borrow less? We see a contraction of certain sectors. From your side of the store, what
Yes.
do you see?
I mean, there is a lot of different market indicators that you'll see whenever anything happens, and we have seasons as well of borrowing. We have, there is seasonalities, there is, like you said, certain tensions that happen, even certain things politically in Kuwait or outside Kuwait, always affecting what's going on. And our role as a bureau is to take that intelligence or market changes or any drastic shifts that we see, and we raise it right there and then to the regulators, and they could take action. I remember, I think, when in COVID, and I wasn't there in the time of COVID, but this is one of the things I've read through and kind of sift through is
We cannot not talk about COVID.
exactly
Probably. Any sector that
it's bigger than anybody thinking. It affected a lot of the businesses. It affected a lot of individuals. A lot of people were out of jobs. And that's, when there was certain delinquencies across the board, that's where the Bureau kind of works with the regulator, and the regulator issued kind of a relief for certain people, because that relief will be probably an order from a regulator to the lenders saying that you don't report people as delinquent, for example, for 3 months, or give them kind of a relief that these delinquencies during times of COVID or whatever it's called, whatever issue that's happening, that don't get into people's credit report because it was outside their control. They didn't default because they wanted to. And that's where I've seen it across the market. And there is even certain indicators that they call them crisis reporting.
Okay.
Yeah, so crisis reporting can be a different type of reporting.
Okay.
And it's something that we're currently studying and looking at, is how do you report on people on crisis? And what are, and thankfully our regulator here have been very kind of proactive about this, to ensure that people don't get misjudged because of a crisis, and that doesn't get into their credit report. And it takes us to basically raise the right flags, give the right insights, and the regulators to take the right action. And, as a bureau, we raise flags, we show insights, but we never take a decision. Whether for lenders, they take the decision of giving or allowing. For actions, it's the regulators.
Yes.
So we're in a very kind of unique position to show, but not act. But that's our role, and that's how we, that's what all bureaus do.
In your experience in moments of crisis and uncertainty, where do you see the first major changes? Is it in the corporate side, or is it at an individual level?
I think it's equal across. It's after all, they all feel the same shock, and you're seeing a lot of the kind of the market gets impacted, and we see it. A lot of people get cautious. A lot of people different. One thing that you've seen, and I've seen when in the times of COVID, I think I was still working with Google partners. We've seen a lot of shift go online. And this is what we've actually seen with the recent crisis. A lot of the transaction became online. And that was something that we were ready for this time with digital consent and certain mechanism that we were able to shift to the online, whether people were stuck or not able to go to work because of war or COVID or whatever it is. But there is a lot of that digital shift that you see during crisis, because people will still buy. People will still spend because they need to, maybe in a different way. But the medium has changed to become fully digital.
This is exactly one of the points I wanted to touch with you next. I'm curious to understand, when we talk about financial behavior, what do you think are some of the indicators that the market sees, more trust and it's more confident, let's say, or that there's on the contrary, there's doubt in the market?
As I said, I mean, the spending. The spending usually, and that's across the board. If you see people taking more loans, if you see people spending more on the credit cards, the applications, the loan applications, is definitely a good market indicator that everything is moving, the economy is thriving, and there's a lot. If you see that slow down, it's definitely so. The spending is not always cash. There's always, it's always borrowed. There's a big part of it. And I always say, like, we're living now in a pay later economy. A lot of the people wants to pay later and not pay now. Even if they have the cash, they keep it and take the loan. Or
this is what we were told, right? The smartest way to manage your finances is to invest your money in something and use the bank's money for your daily needs.
Exactly. So that's whenever you see people are positive and kind of buying more, or borrowing more, that's the positive indicator. And it goes equally for consumers and commercials as well.
But do you think the credit behavior in itself can reveal trends before any of the more traditional economic tools can?
Somehow, yes, of course, because if you see people who are naturally not defaulting, that started defaulting, that's definitely there is something going on. If there is corporate slowing down, if there is major kind of shifts that we've seen, definitely, because a lot of the businesses depend on borrowing. A lot of the people depend on borrowing when doing their day-to-day transactions, or businesses and their growth, and merchants and goods and all of that. A lot of it has to do with that. So whenever there is a market shift or a market change, we feel it. We feel it first, and we always raise the right flags to the regulator, as they have also full visibility over what we do.
When pressure starts entering a market, who do you think feels it first? Is it the larger corporations? Is it the SMEs? Is it the end consumers? Do you see any specific trend there?
I think it differs market to market, Christina. It's not something that, I can tell that Kuwait has consumers first or SMEs first. And it also differs from one type of crisis to the other.
I agree 100%.
Right?
Yes,
Some crisis hit one segment more than the other, and other kids. It all depends.
From a risk perspective, what do you think matters more? Is it size or behavior?
I think it's really behavior, because with size you can always kind of slice and dice and kind of reframe the risk or restructure the risk. But it's the behavior that is consistent, and no matter how you restructure the risk or the amount or everything, you can always kind of get back on track with behavior.
Can CINET see trouble before the market admits there is trouble?
I think we see trouble all the time. We see trouble on a daily basis. There's never a market that everybody is repaying and everybody is on time. So we see it all the time, and we raise flags all the time. I think it's the trends that we try to flag rather than the day-to-day trouble. So if everybody was paying on time, we wouldn't be here. We wouldn't be there. And even though people sometimes when they borrow, they have certain collaterals or they have certain kind of protective measures that the bank do, but still, I think it's very important for us to show where the trouble is and how big is kind of the impact, because there could be certain delinquencies or but the impact isn't huge as long as we share it, and as long as that we have the right flags to share. That's the important part.
We're talking about all of this technological advancement, and now there's this talk about AI underneath everything, right? And probably AI analyzing data and doing a lot of this, hard work that it used to take a village. Do you think that that we're still that intuition is becoming more important or less important?
I think so. With AI does not replace decision, does not replace kind of the action. It just makes the decision much easier and much faster. When people used to process loans, they used to look at dozens of papers and history and analyze it and take 3 to 5 days to process a loan just to look at someone's full. Right now with AI, it can digest all this data for you in seconds, and it gives you certain indicators, certain probabilities of default, probabilities of being maybe late a few days here and there. So the beauty about AI is that it gives you fast insights, not decisions. So it gives you fast insights. It can process bigger data much faster, and it can give you all of the indicators in a very kind of streamlined, very in the way you like it as a bank or as a lender or as a real estate kind of a landlord, to be able to take the right decision. So making the decision faster is very important, and that's where AI comes. It helps us optimize our operations to ensure that you take the right decisions. So I would say instinct still there, but it is affected by the numbers and the insights, because a lot of people, follow their guts when there is not enough information to take action.
Yes, true.
But right now with AI, there's a lot of information, and it's being digested and formulated and formatted beautifully for you to take a much informed decision rather than a gut decision.
Yes, but do you think we will be able to fully automate these decisions?
There is ways to automate these decisions, and I've seen all the case studies in Oman where they've done it for certain kind of smaller retailers. So what they do is, for these smaller retailers, somebody's buying, I don't know, some electronics, And you can give the power to the person who's at the cashier to approve or reject that, installments. So what they've done is, they look at all the insights that's coming from the credit bureau, but they've also built an engine on top of it that if somebody of this credit score and has this kind of income, they have kind of a criteria that they built that criteria and automate that decision. And it works really well for the smaller companies because you don't want to give the power to somebody who doesn't have enough knowledge to look at the certain indicators. And with that, you're automating the full kind of lending decision with using the right indicators, the right criteria, the right measures. As long as you build that engine with somebody who's a very kind of a credit person, you always take somebody's brain and turn it into a criteria, and that's the beauty of it. You can change that into an automation engine.
Exactly. You mentioned buy now, pay later.
Yeah.
And we keep hearing about these sort of innovations, but you see things that we don't. I want to understand from your perspective, do you see these sort of new models as expanding access to finance, or do you think they're just creating new forms of risk in the market?
I love that question. When buy now pay laters came out, a lot of people thought they are for the kind of people who are not salaried, people who are Gen Z, all the new and young people that will actually focus on using buy now pay later because they don't get access to credit cards or loans. And we were absolutely off because a lot of the buy now pay laters serve all the market segments equally. A lot of people see them as convenient credit line that they can use to buy small things here and there. And with that, they've actually created new data sets for us. Because if there is a student who currently does not have a loan or cannot get a loan because he's not salaried, but is using the buy now pay later responsibly, by the time he gets salaried, he'll have good credit history and he'll be very lucrative to banks too. Nobody will say no to his application.
Okay, that's great to know.
It's a way to build your credit being young. And that's one of the reasons when Buy Now Pay Later were launched in Kuwait, we went directly to colleges and we did kind of financial literacy sessions and workshops to college students. The Buy Now Pay Laters are coming out. Make sure that you understand their implications, that whatever you do with this 500 KD small payment will affect your lending future. And the beauty also of the ecosystem here with the Central Bank of Kuwait is that when Buy Now Pay Later were launched, they were first incubated with the Wuluj, which is the innovation hub of Central Bank. So there was a part of it where they were kind of born within the regulator and they were released with full credit integration. So whenever a buy now pay later decides to say yes, it has to check the credit score and the credit report. Any good or bad payments that's happening on the buy now pay later are reported daily to us as CINET. And that created the additional data and additional knowledge in buy now pay later. Versus I've seen in Europe, buy now pay later were not integrated with the credit bureaus. So there were, at the beginning.
Okay.
And there was a blind spot. A lot of people defaulted or did good in buy now pay later, but that was never recognized by the credit bureau. And the next time they went to the bank, they don't know anything about them. So it was kind of the early buy now pay later models. So that it created this blind spot that later they were built into and they were asked to report to the credit bureaus. Versus in Kuwait, from the get-go, any buy now pay later came into the credit kind of ecosystem, and it was something that really creates a great opportunity for the lenders and for the people who are borrowing to build their credit history before they go into banking.
You mentioned Europe, and I was actually just now thinking that buy now, pay later for us is something that's more recent history, let's say. But one of the things that were not probably accounted for, and I think it's actually something that I'm pretty much against because I think it created so many issues in the market. There were these companies that were lending online based on, just civil ID and a few other data. Mm-hmm. And obviously the interest rate was very high, 40, 50%.
Wow.
And because people were in desperate situations, they would choose these sort of, short-term solutions, but it would end up creating a lot of issues. And these things, I don't think they get reported to any sort of credit bureau because it's kind of like private practice. Mm-hmm, mm-hmm. But in terms of that, I want to touch a point with you that I think is increasingly important because we're talking about processing data and we're talking about AI.
Mhm.
But we're not talking enough about consent, right? Digital consent in collecting this data. And we know that there's been more emphasis recently. Tell us something about this. What do you see as the importance of digital consent when it comes to collecting data?
Yeah, as I said before, you own the data. It's your data. It's your payments. It's your behavior. So one of the main kind of pillars that we have as part of our credit reporting is consent, and it's actually mandated by Law 9 of 2019. There is a clear mandate that we do not collect or we do not report anything on anybody before taking their consent. And historically, with the banks, the consent happened through a paper that you sign when you take the loan. And that means, that you consent for bank A to go to credit bureau and pull your report and also report everything if you take a loan with them. But with this buy now, pay later, where would you get somebody to sign that paper? So what we've replaced that whole cycle of approvals to the Kuwait Mobile ID. So with the Kuwait Mobile ID, you will get the same type of consent, and you would authorize that. And then the buy now, pay later, the digital bank, and even retailers right now are doing it in Kuwait because a lot of these stores are working online. So instead of
Yes.
you going to the electronics store, you're buying something online, and you would consent to it. You get it on the mobile ID. You would consent to it, and that consent is logged. And this will be kind of and per the Kuwait kind of digital law that this is a valid approval that you yourself have approved that. And we made sure that this digital consent was rolled out before we rolled out anything on buy now, pay later, because they're purely digital in nature. And then after that, all the kind of lenders were wanting to do it as they're changing, where banks are going online with their credit cards and loans, retailers, and a lot of them, they want to focus on get rid of the papers and do the whole process digitally.
Yes. May, I want to go back to some of the initiatives that you had at CINET. And one of the most important things that I had the pleasure to see personally was last year in November when CINET hosted the credit conference here in Kuwait under the Arab Monetary Fund. And I think it's something that we didn't speak enough. And I think many people who are not involved in the banking sector and the financial sector maybe did not really understand much about. And I want us to take this moment to talk about it. I know that there were a lot of credit bureaus from the region attending. I want to know what was the gist behind the event, and how do you feel that this is adding up positively to what's currently happening in Kuwait?
The credit conference, honestly, was our campaign or our literacy, our financial and credit literacy for the B2B. Because we did a lot of financial literacy and credit literacy specifically on why CINET is for the consumers. But when it comes to our main segment, which is the businesses, the lenders, all of the sectors that we work with or intend to work with, like the real estate and so on, we needed to make sure that we show them what is the future of credit bureaus. How is a credit bureau vital to every financial transactions that we're doing, where them as businesses are doing. So what the idea of the credit conference was to bring a lot of case studies from all over the GCC and Arab world as well, and success stories of, for example, specific scoring for SMEs, the buy now pay laters from across we had sessions around the EKYC as a solution. We have the leakage identifier.
KYC is know your customer.
Know your customer. Yes. So we've brought case studies from all over the region, and the main audience there was all financial institutions and other institutions that could benefit, like real estate, telecom, big retailers, all of that. So they were invited to see what the world of credit have come to. And it was a way to say, CINET is not just a repository of data. There's more than just credit data. There's more than just history. There is other tools and opportunities that, because we were expanding our product set. Historically, we only had a credit report and a credit score as our product, but right now we're making a big set of products.
Okay.
And it's good to, see what's happening in the world and widening their horizon. to say that the next era of CINET is going to be much bigger, and this is what the world is doing, and we'll be doing that and a little more.
But we're talking about this region, right? And I always say that this region is special. It's something completely different from the rest of the world for many reasons. And I'm thinking about the name of it. It's the Gulf Cooperation Council.
Yes.
So if we don't have yet, we're expecting to see even more cooperation than we have right now. And we know that there's a lot of changes happening now in the economy towards that. And let's go back to the economy and to the individual businesses. Do you think that the reputation a business builds in one country should move along with them once they decide to open new markets in other GCC areas?
Definitely. That's something that we've been actively working on based on the directives of the GCC.
Okay.
So what we're doing right now, and we've continuously meeting with all the GCC countries through the council, is that we do the exchange of credit data across borders. So we've already launched that with Saudi Arabia, with Bahrain, with Oman, where if any of the companies, any of the business had a history in Bahrain and now is opening up in Kuwait, when it goes to any bank in Kuwait, they can look up their credit report all the way from Bahrain through CINET, of course. So we have an ongoing collaboration with Benefit, which is the CINET of Bahrain. And then we bring that credit report for the bank here to see. Whether it's good or bad credit, they have to see it before doing any lending here. We're also we're finalizing the exchange of credit with Emirates and Qatar as well. Okay. So then all the GCC countries will be able to exchange that data, and we're doing it now for commercial. But the next step is also to go for consumer. Because a lot of the expats may have credit histories across and move around the Gulf.
Yes, move around the Gulf.
It's a very interlinked kind of region here with the businesses, the people. So that was kind of the whole goal of linking everybody, and it was a knowledge of data, but also we do a lot of knowledge of knowledge exchange as well. So we exchange data and we exchange knowledge to ensure there's proper collaboration between the GCC countries.
When do you feel that this sort of initiative started being more clear as a necessary next step?
I think with exactly what you mentioned, a lot of the businesses kind of moving, and a lot of Kuwaiti businesses are opening up in Saudi, are opening up in Bahrain or Emirates. And there is value to show that you actually have a good credit. There is big facilities. When you go there to a bank, you're able to establish yourself much faster.
Yes,
and that's kind of, we're trying to help, and a lot of the SMEs kind of benefit from that as well.
Yes, true. Now, I'm curious because I want to know, when you're trying to create the more integrated credit ecosystem, what do you feel today are still some of the obstacles, let's say, in reaching the full potential of it?
I think a few obstacles that we see is the availability of kind of 360 data. So we do have data that is solid coming from every lender in Kuwait. Now we're adding the retailers, which was not long time ago. We're also looking into even bill payments. Any kind of electronic, not electronic, electricity bill, water bills, all of that. It's part of behavior. But the problem is sometimes you struggle with making the right connections or getting the right data to ensure that. I've seen that in some countries of the GCC with some privatized sector, they are able to get the right data. But I think that number one obstacle is to ensure that every data point about somebody's behavior is digitized and has high quality for me to be able to put it in the credit report. And once we have that data, there is a second obstacle of actually people not following kind of what you said, relationship and instincts, but looking at the credit report before making a decision. A lot of the businesses right now, when they look at the credit report, they do it, for example, out of a mandate or out of being too precautious. But at some point, I think even if two people are going into a business kind of partnership, they should look at the credit reports of each other, because it's a way to look at the credit worthiness of this partner that you're going into business with. So it should go beyond just borrowing. It should go as who this person is, what is his credit worthiness, am I able to do business with him or not?
Do you think that this could shape also the way that people partner for businesses, not only in lending behavior, let's say? Because I'm thinking, if I'm going to do business with somebody, let's say a company comes to me and says, I have this amazing project, you can invest, you can become my partner, so and so. Is it important for me to look into their credit behavior? Do you think this could actually change the way I look at the project completely?
I think so. I think so because it's you're not looking at them right now. A lot of what we do is based on our history. And that if you look at somebody's credit history, you're able to kind of predict what they do in the future.
Yes.
I've seen this also. I think in Qatar they do that for credit for business relationships that they are able to release credit reports. Even somebody who's trying to, I think, buy a car or rent a car or something, that they do the credit reporting. So a lot of it's just knowing who you're dealing with,
Yes.
especially in people coming from different countries or people you don't know, but there is a good business opportunity. It's a good way to look at somebody kind of on a full view.
I want us to expand a bit on our view as a next step and look at the macro level, because you're somebody who for sure has been analyzing the credit bureaus, not only of the region, but also in other areas. And I want us to compare a bit and, see some differences between other markets and this region, because we know behavior is different, but also we know the credit bureaus as a structure are very different from one region to another. Whereas in some countries they are they're considered public sector, have different governing laws. We know in Kuwait specifically, it's a private sector entity, which makes it completely unique. I want to understand more from your perspective. How do you feel Kuwait differentiates itself in terms of this, credit ecosystem? And what do you think is the biggest asset in having a private credit bureau?
I mean, if if I want to compare it to the GCC, because that's kind of a market that's very similar to us, and from market size and characteristics. In the GCC, there are 6 bureaus. 3 of them are private. 3 of them are government owned. And there is, of course, pros and cons of each. I think in Kuwait, or for any bureau, the most important kind of factor is the collaboration that happens with regulators. A lot of what the bureau does is closely mandated by regulation. It is closely affected by the regulation. And that's where strong regulator collaboration is important. That's kind of the pros, that if you're a government entity, then you're probably part of that regulator, and it's easier for you to mandate that. Versus being on the private entity, it makes you very nimble. You can move faster. The projects are different because there is no, I think it's easier for any company that is private sector to get and innovate and move faster than being in a public sector.
Maybe less bureaucracy, less layers of approvals.
Definitely. And that's kind of, and the way the people kind of, or the sector sees you is different. So sometimes it helps collaboration. Sometimes it slows kind of adoption, because government entities, you'll have to work with government, you'll have to work with regulators. But I think the key factor is how close are you to the regulator? And when I looked at the GCC, all of these bureaus are very closely tied to the regulator. And I think that's where I think we're at a plus, and we're very aligned with the regulator. Versus if you look at the market that the United States, for example, or the UK, huge market. I don't think bureaus talk to regulators, like as much as we do. And that's kind of, it makes it harder for things to make big changes, or to ensure that people are reporting the way they should, or companies are reporting. So the close collaboration with the regulator is definitely a plus in a smaller market and a smaller economy like the GCC. And that, being in private helps you move faster and support not just the regulator, the sector overall.
Well, when you look at practices of credit bureaus, let's say in Europe, in the United States, and in other areas, do you feel that there's still room for improvement for us? Do you think that there's still maybe certain practices or policies that if we would adopt locally or learn from, could help us have an even more integrated credit ecosystem?
Definitely. A lot of the kind of the foreign markets have adopted alternative data. So they use data which is not financial in nature that look at.
What do you mean by that? I want to know more.
There's multiple views about it. So people who are, for example, open banking data, like your deposit, things that are not borrowing in nature, they use it to judge you for credit scoring or credit reporting. That right now,
For example, how much money you have in the bank at any given moment.
exactly. And to us, that's
Shouldn't be 50K deal, okay?
and that's something that we don't do right now in this region at all. We totally or solely look at the credit and the borrowing and the repayment to judge somebody and ensure their credit score. But other markets have adopted these kind of alternative data in case you don't have any borrowing history. And sometimes they do it anyway. Some of them have included even, social media, other data, which I'm not in agreement with. But some people think that this is part of the customer sentiment analysis that they look at.
Maybe also depending on the client, right? Because we know some people monetize from social media. And maybe this... If you consider social media as a stream of income revenue, let's say,
yes,
it makes more sense, no?
Sometimes it does, and sometimes it's just people behaviors, people how they, what they're thinking, their directions, all of that. So a lot of it is different approach, but every market has its own characteristics, and maybe because of the lack of data that they do this. Even I remember when we were in the Arab Monetary Fund, the last meeting. The Maghreb, Morocco, has actually looking at social media or kind of online data to be able to judge people for the small loans and things like that. So there is different efforts in different countries of the world. But I think some of it applies to us, some of it don't. I mean, and it's good to know what's going on around. A lot of the bigger markets, they have more flexibility over what gets reported.
Yes.
And that could be a positive sometimes, given that you have the right data quality. So some flexibilities are offered when you're in huge markets, but not necessarily applies to markets like Kuwait or the GCC.
I think it's interesting because basically what we're saying is that as the economy evolves and as technology evolves, we might see more and more inclusion of different tools that give us a better understanding of credit score or, financial behavior, let's say, of different people.
Definitely. And open banking is just around the corner in Kuwait. When we say open banking, you have information to someone's kind of deposits and transactions and trends and so on, which can help judge somebody, for example, who has no credit history.
Yes.
So they can be beneficial. But you need to ensure that they're coming through the right source, they're coming through under the right regulation and under the right consent, because customer privacy is key when it comes to using that data to score them or to put them in a specific segment or sector.
Exactly. And we don't only need the right regulators and the right tools, we need also the right people, right?
Of course.
And I think about one of the most beautiful segments of this podcast when we go back to leadership, because I do believe that people make the difference at the end of the day. And I want to go back to you because you're somebody who's not only very smart, but also very strong. And knowing you the way I know you, I want to know, when you took this role in CINET, what was one of the biggest obstacles that you saw? Maybe one of the things that, I don't know, gave you a bit of chills. You said, oh my God.
When I took on CINET, and it's almost 2 years now that I've kind of taken on this honor of leading the credit bureau of Kuwait, I think it was the big challenge was reframing the company, not just as a traditional bureau, but as a modern bureau that does much more than credit report. And with that comes a lot of expectation of the shareholder, of the stakeholder, of the regulator. Managing stakeholders, honestly, is the toughest part in somebody in my position, to ensure that to align people on the same expectation is really hard, because every part of the puzzle when it comes to credit bureau, the customers want something, the shareholder wants something else, and the regulator has certain mandates and rules that we have to go by. And I think my background before coming into CINET as a chief data officer So I worked for a few years and even before as people who work in data, they're always using data to tell a story and influence decision.
Yes.
And when you use data to create that narrative and make sure that you influence decision or convince people of doing something. I'm always going to the board trying to secure some big, funds for a big project for my next big portfolio. Or I'm going to the regulator seeking approval for, adopting cloud or things like new things that are into the market. So when you're trying to introduce new things to make, to be a change maker in the market, it's hard. But I think being a storyteller, that key skill that I got from being in data for so long, I was able to draw the right narrative, draw the right story to influence people's decisions or align them with the agenda that I have to ensure that they see the picture the way I want them to see it, but also realize that there is value to them and to everyone in our stakeholder circle. And even if sometimes they don't agree with it for their own kind of agenda or their own priorities, but it makes sense to bigger priorities. And I always kind of draw the narrative that it's not about CINET or the customers or the shareholders, it's about Kuwait. And when it's about Kuwait, I think everybody kind of take a step back and think about the bigger picture. Once you draw that picture and it's about how do we make positive changes on the credit landscape of Kuwait, I think everybody will be on board.
Yes, true. I like what you said because I always say no matter what your job is on paper, your role is sales because we're constantly selling something to somebody, an idea, whatever. It's always about convincing somebody of something else.
Definitely.
But looking at your job and again at the mission that the credit bureau has, how hard it is to make unpopular decisions.
I mean, it's very, very hard because, like I said, everything could affect kind of a bigger. It's not about just a small company. We are, as a size, we're a small company in size, but we're big in impact. So any decisions have to be blessed by the regulator, have to be kind of bringing positive impact to everybody. We have to study so much data points before ensuring that we have kind of made the right decision or rolled the right product. Like I said, when I was thinking about the tenant profile or tenant report and doing that for real estate, we have to consider how many people are they going to be able to rent the right apartments? Are they going to be kind of losing where they live or something? So there's always these impacts that you have to study and analyze. And the beauty, again, about being in data is that you're so good at analyzing data and studying and revising the impact, and then ensuring that you do your study once and twice and thrice until you make the right kind of well-informed decision and a data-driven decision always.
Do you feel that there's any lingering gender bias when we talk specifically about these analytical roles, let's say, it's specific industries?
Funny enough, when I was in the States, I saw more ladies in data than gentlemen. And I think data by itself draws ladies more than, I don't know, maybe we as ladies, we look into the details more.
We're overthinkers. Don't judge us for that.
Yeah. But when I looked at the last time we were at the Arab Monetary Fund, out of the 6 GCC countries, 3 of these 6 GCC bureaus, 3 of them were led by ladies.
Okay.
So there is great gender balance when it comes to leading the bureau with a lady. And I think it just draws us more. Back when I was in technology, pure technology, I was always the only lady in the room. And it was tough. It was always tough. I didn't see that in data. It's interestingly enough. And I think there was enough people or ladies in data that slowly grow and provided the right pipeline for them to lead these agencies.
May, when you look at your career with CINET, and I'm sure that it's going to continue being a successful one, what do you hope it's going to be the biggest impact you're going to have with CINET, and what do you hope to leave behind you?
I think one of the biggest, and it's our vision really, and one of the visions that when I came on board, kind of we had to revise the vision and put that bigger kind of dream, is that CINET will be the pioneering data hub of Kuwait. And when I say data hub, I don't just say credit data. There's much more than just credit. it's data that we put to provide insights. And as a pioneering data hub, we hope to inform decisions, many decisions, not just financial decisions. We are unlocking kind of the economy and supporting the overall economy, because is with the speed of decisions, we need faster decisions right now. Everything is going digital. There is a lot of digitization, AI, all of that. You need the bureau right there to give you the right decisions. And what I hope to be is that for CINET to turn that data into value, to ensure that we are enabling responsible lending, that we are, enabling financial inclusion, that we are able to help the economy grow and ensure that it is part of the overall economy of Kuwait.
May, I don't think you could have said it more beautifully. And knowing that you're also Kuwaiti and you're somebody who cares deeply about the future of the country, it gives me great joy to see that we have so many people who are involved and understand so well their mission. I want to thank you so much for being part of the middle ground today in today's episode, and to thank you for offering everybody a bit of clarity into what credit means and in the financial systems in Kuwait.
Thank you, Christina. It was honestly a pleasure to have this chat, and a beautiful way to say the message of CINET across, your audience. And I really thank you for this.
For sure, we will be in touch. I want to know what happens next, and I look forward to seeing more of the initiatives, be that in real estate, in KYC, or any other initiatives you will have.
Inshallah, we'll stay tuned.
To everybody who has watched until the end, I want to thank you again for staying with us. As you now understand, data is an important part of our lives, not only to make decisions, but to also ensure that our future is better and to ensure that whatever decisions we take on a daily basis is going to serve us. Stay with us for more episodes and more information with leaders from Kuwait and abroad. Have a wonderful day.